All right, check this out. According to the latest data from NASDAQ.com, average monthly trade volume for both U.S. equities and options remains at all-time highs. Volume coming from retail traders specifically, meanwhile, surpassed all-time highs earlier this year. That's even more volume than during the meme stock craze. So what is trading volume, and why is it so key to being successful as a day trader? Let's talk about it. Let's face it, volume to a trader is oxygen. It's water to a fish. Without it, we simply cannot survive. By definition, volume refers to the number of shares, contracts, or units of a particular financial asset that have been traded in a given time period. In recent years, we've also seen the growth in popularity of measuring volume at price, or what's known as volume profile. Basically, it's a measure of how much buying and selling activity is taking place in the market for a particular asset.
Volume can provide important insights into the supply and demand dynamics of a market, as well as how easily traders can buy and sell the asset without significantly affecting its price. Now, high trading volume generally indicates high market liquidity, which can be beneficial for traders looking to enter or exit positions quickly and at fair prices. As day traders, we must be able to analyze the market and make informed decisions. One crucial tool that all day traders use is trading volume. So here are the top 3 reasons day traders rely so heavily on volume. Number 1, market liquidity. Volume indicates how easily it is to enter and exit trades. You're not going to get 10,000 shares. There's only 100 at every single price level. Number 2, identifying market trends. Higher volume traded in a specific direction, hopefully up because we like the longs, can also provide confirmation of a trend and give traders more confidence in joining that trend. On the other hand, most traders will also look for volume spikes to confirm a possible reversal of a trend. And finally, number 3 here, confirmation of breakouts. We all love breakout trading. It's a heck of a lot of fun, but volume can help determine whether that price move is supported by strong trading activity. Breakouts occur when a stock or asset price moves beyond a significant level of support or resistance. Volume confirms that breakout by indicating whether the move is supported by that strong trading activity.
All right, now let's have a second and take a look at how to trade using volume as an indicator. Most of the time when you're gonna look at volume, sometimes it's so important on these small cap stocks, you have no ideas. Okay, so let's have a look at SAI right now. We have a perfect example right here, right now. Today, so SAI starting to go crazy, man, a big move up. Look where we started, $1.50, we rip all the way to 7. What? Look at this volume that's happening in the pre-market. 9 o'clock, we start to hit some bids, right? This is where we get long. We start to see some volume kick in, volume kick in, volume kick in, take out the day's high. But then look at this flush back down. Check out this big, huge sell candle right here. When we're starting to get increased volume and the market shoots up, look for an increase in volume that indicated where for us to get out. Not only was it a huge volume spike, but it was also at the high of the day. Whenever you see an outsized volume like this, especially the color of the candle, note that it's red. Look at the action after that. We see this big, huge spike in volume come down. We immediately put our stop order slightly below where we're in, because this huge candle, if it wasn't a liquidity candle, what was it? And you see a huge flush to the downside, and then the very next candle, we're winding up getting out on close to a 50-period break. So this is how you want to use the volume indicator. You see monster move up, take this volume candle and get at least something out. Utilize an outsize. I mean, this is 1.4 million shares. The highest candle before that was only 500,000. So it's a 3x candle there, giving us that indicator that, hey, maybe something's going on, and that's a big flush candle. And you can see what happened to the stock after that. We went from $7 down to $4 and even continued lower. So this is a quick example on how to use the volume indicator against small cap stocks.